All right, welcome back, YouTube. So today I'm going to give you an update on AMC and the price action that we're seeing and why today was actually a good day, because the things that we anticipated over the last 48 hours actually came to pass. But before we do that, make sure you guys check out Moomoo to get payment for order flow free trading. And also, if you want to join my Discord to get my up-to-date plays for the week and my trades, we can all share information inside of there. So let's get into the price action here. You'll see that right now we are at 947 to close today. And you may be saying, okay, why is this a big deal? But what we're looking for is the price action to see if history was going to hold up to what typically happens when we drop below the $10 range. And that is exactly what is happening. Prior to right now, you'll see that we've had pretty much consecutive red candles on the days getting down to this area. I'll zoom in so you can get a better look, but you'll see that it was relatively easy to get the price down. And this is historically accurate. You'll see it was easy to have a gap down here. It was easy to have a gap down here, easy to have a gap down. And even if we go over, easy to have a gap down. So the range that we were in, typically, if you have a gap up on one side, you can have a gap down on the other. We know support, resistance, as far as for anticipating entries, computer algorithmic trading, stuff like that. So fine. But historically, when we get in this range here, below 10 bucks, this is where we typically start hitting support. We start getting bounces, and shorts start having a really difficult time manipulating the price. Why? Because this is when we come into a demand zone. We have because you have access of supply, because we know that they're creating synthetics and stuff like that. But the demand gets so high at these levels that it becomes really difficult to manipulate the price. And that goes back to the spring analogy as far as pushing it down, and you start having that resistance there, and we start having pretty much like that tug of war, and we start really having explosive price action. So you'll see we've typically had some resistance here. We've come down here before, got rejections off of this area, and bounced back up. We typically get the opportunity here to have the brakes pump before we go back down, but we always bounce back up to at least around the 9-10 bucks range while they can contain us there. But it's very difficult, because remember, last time we were here, this was around like the 874 range. We ran up and to around 20 bucks before we were in a gap up territory again, and they're able to get it down. And this is going all the way back until last year. You'll see that anything below this range, they cannot keep us there for long. This has been, ever since everyone got into this play, they cannot maintain these prices for long. Even if you look here, you'll see like the wild swings and stuff that we're having here in these runs up, because you may say, oh, what's the big difference here between like a $5 on the 21st, a $5 on the 5th, and 10 days later, we're, what is this, 874, back down to 630, back down to 5, up to 713, down to 613, up to 924. And you maybe say, oh, that's very minimal price action. No. These are 20, 30% swings that we're seeing here when it comes down to the actual price action. So it's not even like it's in the gap up territory where you're having these gap downs and it's this consecutive red days and stuff like this. No. When it comes down, when price action gets below $9 on AMC, it turns into a brawl. It's not that one-sided. It's not like what we've seen over the last few weeks, and we've had these gap downs here. No. After 9, once we get down below these rates, it turns into a brawl, and we can expect some extreme volatility in these ranges here. This is why at these ranges I get really excited. This is what I meant by I think volume is going to pick up. I think the options and stuff are going to pick up, because they cannot maintain, historically, they cannot maintain these prices, because even if they do get it lower, they're going to have to take a more aggressive approach to try and maintain the price at these ranges, because typically when you come down this low, we have those really explosive pop-ups. And we'll see here now that they may be trying to do like some short ETFs or some single stock ETFs and stuff like that, so they can try and pay in cash. But ultimately, you'll see that those funds are not typically made to be held long term. So even if they did go that route, they're setting themselves up to lose a lot of money, even historically. But that doesn't seem to be an issue, because they've been doing that for the last year, just with manipulating the stock here. But I'm very happy to see this little green wick down here for today. because we are right on time with history. Let's look back here, July 26th, March 22nd, February 22nd, January 25th, May 21st, May 13th, March 14th of last year. We are doing exactly what we've always done at this range, which is this is pretty much the battle zone that we're entering right now. So as I said yesterday, I am a buyer, and anything below $10, I am increasing my share count. This is pretty much a signal to good times ahead, and make sure that you guys are hanging on, because at this range and lower, this is where the fight starts. Hope you enjoyed this video. If you like anything I had to say, make sure you share the video, subscribe to the channel, like the video as well. I appreciate all of you, and I will see you guys in the next one.